Hey there, traders and investors. Ben at Tyndall, tradinganalysis.com. It's Monday, March 29th, 2021, and I'm seeing some interesting signs at work in the stock of Lockheed Martin. Is the consolidation over? Is it finally time to get long this name once again? Welcome back once again, traders and investors. We're taking a look at Lockheed Martin, ticker symbol LMT. We've been pretty much more or less in consolidation since February of 2018, and it was back then that we were trading $362 per share. We sold off into the December of 2018 lows at 242, at which point we rallied all the way back north of the previous highs, establishing new highs in February of last year at 442.5. We then were hit with the COVID sell-off and sold all the way off to $267 per share. We then rally back north of 400, sell off all the way back down to 320. And here we are once again attempting to challenge price action north of 350. $350 a share is a very key level for Lockheed Martin. And not only are we trading north of 350, we are now north of the 2018 market high, or I should say high for Lockheed Martin. This consolidation does resemble that of an Elliott wave triangle. It's a traditional triangle, potentially, where you have higher lows at work. Here are your three higher lows, and here are your lower highs at work. What's interesting is when we combine what we're seeing when viewing Lockheed Martin through the lens of Elliott with what we're seeing in Optima via relative rotation graph analysis, it starts to paint the picture that this consolidation could be coming finally to an end and setting up for a resolve to the upside. Alternatively, if this consolidation has not yet completed, the alternative analysis has us completing consolidation sometime into the next quarter, but even if that's the case, we should still defend the $320 support back from February 1st. So let's take a look really quickly at some of the traditional indicators. Here we are on the weekly chart, trading above both the 250 period moving averages. We're seeing a positive MACD cross, and taking you off of the weekly down to the daily, you'll notice we are a little bit extended on this particular time frame. We've made a pretty significant move from 320 all the way up to $372 a share. And you'll see in just a minute that I am anticipating a bit of a corrective pullback. But overall, I'm monitoring for signs that this consolidation, this 3-year consolidation, has finally run its course, and it's time to get long once again. So let's first go over to the Motive Wave platform and take a look at the chart of Lockheed Martin through the lens of Elliott. You'll notice that even without Elliott, once we printed the June 8th of 2020 swing point, we had an established downtrending resistance line. In fact, this held as resistance for numerous tests, and we were never able to truly resolve north of that downtrending resistance line. Here we once again maintained the previous low established by Lockheed Martin, except this time we are now north of the downtrending contracting resistance line. And as I just mentioned at the start of the video, I'm seeing the signs that we are attempting to resolve to the upside. Bringing in the possible Elliott wave count, you'll see that we had the third wave top in 2018, and we've been sideways in a consolidation. Taking you off of the weekly down to the daily and now down to the 1-hour time frame, you can see here we have the red resistance trend line. If we are going to entertain the idea that the fourth wave triangle completed on January 28th, a potential interpretation of the move would look like this. Up in 1, a sideways flat in 2 with very appropriate fib. Smaller degree 1, 2, 3, 4. We're now in wave 5 of orange wave 3. We've met the 1618 objective. We've met the 61% objective for wave 5 compared to 1 and 3. That now opens the door to the 2618 of 5 and 3 compared to 1. and that opens up the door to the higher degrees, 200%. That gives us a 373 to 383 window prior to anticipating a corrective pullback. The corrective pullback, I would envision back testing the contracting resistance trend line that we're now trading over. What's interesting about the third wave price targets that I just gave you is they line up perfectly with the November 2020 resistance at 382. That would give us wave 3 into the previous resistance, wave 4 to back test the contracting trend line, and then continuation. That would then complete a higher degree wave 1, at which point we would see a 3-wave pullback to retrace this 5-wave move, and that's when you'll have the more confirmed upside trend resumption. As mentioned at the start of the video, if in fact this interpretation is inaccurate and the triangle is still ongoing, the alternative view would basically have us still in consolidation, but in a slightly different triangle. This would originate the triangle off of the February market high up at 442.5 and is still longer term bullish. This would have us moving up and failing prior to the B wave high at 417. We would then see some sort of a 3-wave pattern to take us lower in wave E, and then you would get the upside trend resumption. That said, I'm leaning towards the interpretation that you see here in front of you, as you'll see in Optima in 1 minute. A good example of the post-triangle breakout back testing the expanded contracting trend line can be found in ticker symbol SPCE. Taking a look at ticker symbol SPCE, you'll notice we had a move up out of the triangle. We completed a 5-wave rally out of the triangle consolidation. We moved down to the 61% retracement, which also happened to be the expanded contracting resistance trend line. If we take that same concept and apply it here in Lockheed Martin, that would line up perfectly with the 5-wave pattern that we currently have in the makings. So from motive wave, let's quickly visit Optima. First of all, let's take a look at the S&P sector spiders compared to the S&P. So taking a look at the daily relative rotation of the individual sector spiders compared to the benchmark of the S&P, you'll notice the industrial sector is still kind of heading to the west here. It just made a move out of leading. However, as indicated by its trend algo, which the trend algo is consider it a form of logic within the relative rotation graph analysis package that can help you determine based on certain proprietary indicators whether or not the move is going to remain kind of established in the heading that you currently see. So an example of that would be, you'll notice here for the XLV, the healthcare sector, okay? We had a move back here in the XLV where it was indicating, even though it was in the improving quadrant, its tail color was red, which was indicative of a move back to lagging. We then see a pivot. Once that pivot completed, it then changed its color and said, yeah, I don't think we're going to move back to lagging. This is likely going to maintain support and see continuation. And as you can see, that it did. So here we are with the XLI. On the daily, although the XLI Industrial Sector Spider ETF has moved out of leading, its tail color is still green. Off the daily down to the weekly, we're going to hide everything but the XLI. You can see the XLI made a pretty significant pivot. In fact, the trend algo was supportive of this not hanging out in the lagging quadrant. It immediately switched from yellow to blue, and then we see that very strong pivot. So now we have the XLI on the weekly with a better relative strength and momentum reading than the benchmark of the S&P. So we have industrials leading the S&P on the weekly. Diving into the XLI industrial sector, what do we have leading it? Well, we're going to look at its components relative to itself as the benchmark. And we'll get rid of everything except Lockheed Martin, as that's what we're discussing today. And you'll notice here on the daily, we are now leading. So greater relative strength and momentum than the sector. And the sector is outperforming the benchmark. So it's the leader of the leader here on the daily. Down on the weekly, you'll notice Lockheed Martin still has a red tail. So the trend algo is still a little bit skeptical. But we are seeing an attempted northeasterly heading, trying to move from lagging to improving. So when you combine all of these signs along with studying previous relative rotation graph pivots and rotations, it starts to really paint the picture that this consolidation very well may have just come to completion, or at the very least we'll see completion sometime into the next quarter. That's it for me. Hope you enjoyed this video. If you're interested in more like this, you can check us out at tradinganalysis.com. Don't forget to like, subscribe with notifications if you want to stay up to date with myself and the rest of the Trading Analysis team. Thanks again for tuning in, and I'll see you on the next video. Take care.